Hey everyone, welcome back to Corporate Decoder, the place where we peel back the shiny corporate veneer to see if the company's insides are just as good as they look. Today we're diving into a filing from News Corporation that gives us a peek into their ongoing share repurchase programs. So what exactly is News Corporation up to? Well, this report tells us they are continuing to buy back their own stock. This might sound like corporate jargon, but it is a pretty big deal for investors and for the company's future direction. Let's start at the beginning. News Corporation, a company many of us know for its media and publishing empire, is authorized to buy back up to a massive $1 billion worth of its own Class A and Class B common stock. Think of it like the company deciding its shares are a good investment, so good they're willing to put a huge amount of cash towards buying them. Why would a company do this? Several reasons. One, it can signal that management believes the stock is undervalued, essentially saying, hey, we think our stock is a great deal right now. Two, it reduces the number of shares available. When there are fewer shares out there, each remaining share represents a larger piece of the company. This can boost earnings per share, a key metric investors watch. And three, it is a way to return value to shareholders without directly issuing dividends. This particular filing is about them reporting these buybacks because they are listed on the Australian Securities Exchange, or ASX. They have to report their share repurchase transactions on a daily basis. Imagine having to report every single little purchase you make each day. This is kind of like that, but for these big stock buybacks. They also mention that this information is included in their regular quarterly and annual reports. The report specifically mentions Class A common stock. This is the kind of stock that typically has voting rights, giving holders a say in company decisions. And then there is Class B common stock. Often, Class B shares have different voting rights, or sometimes none at all. In News Corporation's case, both classes are part of this $1 billion buyback program, suggesting they see value in repurchasing shares across their ownership structure. The actual details of these daily reports are provided as exhibits. These are like the receipts for these transactions. The company mentions these exhibits contain what they call forward-looking statements. Now this sounds scary, but really it just means statements about their intentions for the future, like their intent to keep buying back shares. They are being upfront that these future plans depend on many things like stock prices and general market conditions. They also make it clear they aren't promising to update everyone if things change, unless the law requires it. This is pretty standard legal language for these kinds of filings. Now, what does this all mean from a strategic perspective? A large share repurchase program signals a few things. First, the company likely has strong cash flow and believes it has enough financial health to execute this buyback without jeopardizing its core operations or future investments. Second, it could be a response to market sentiment. If the stock price has been stagnant or declining, buybacks can be a way to prop it up or signal confidence to the market. Third, it might reflect a lack of other compelling large-scale investment opportunities. If News Corporation doesn't see major acquisition targets or other growth projects that can deliver a better return than buying their own stock, then repurchasing shares becomes an attractive option for shareholders. They are in media and publishing, a sector that has seen significant disruption from digital technologies. While they have a strong global presence and diverse portfolio, including news, books, and real estate services, they operate in a landscape where revenue streams are constantly evolving, effectively managing their capital through initiatives like share buybacks is crucial to maximizing shareholder value in this environment. We don't have the specific dollar amounts of the buybacks from the daily reports in this particular filing, which is focused on disclosing the fact of these buybacks and the associated forward-looking statements. However, the authorization to spend up to $1 billion is a significant financial commitment. It means that cash that could be used for acquisitions, hiring new talent, or R&D is instead being channeled back to shareholders through share price appreciation and reduced share count. From a Warren Buffett-style perspective, when a company buys back its own stock, it is a positive sign if the company is truly undervalued. It is like him buying back shares of Berkshire Hathaway when he thinks it is cheap. It is a bet on themselves, however. If the company is overvalued and still buying back shares, it can be a destructive use of capital. Given News Corporation is a mature publicly traded company and this is a structured program, it is likely a carefully considered financial strategy. The key is to watch if the buybacks are truly enhancing shareholder value over the long term by increasing earnings per share efficiently without starving other parts of the business that might drive future growth. Looking at these reports, the main story here is about News Corporation's capital allocation strategy. They are choosing to deploy a significant amount of capital towards reducing their outstanding shares. This choice has implications for their financial metrics like earnings per share and can influence their stock price. It also suggests a level of financial stability and confidence from management in the company's future prospects. So to wrap it up, Nebraska WS Corporation is actively engaged in repurchasing its own stock as part of a significant buyback program. This is a deliberate move to return capital to shareholders and potentially increase the value of remaining shares. While the report doesn't give us the nitty-gritty numbers of each day's transactions, it confirms the ongoing nature of this strategy and the company's commitment to it. Now, my take on this. News Corporation is making a bold move by putting up to $1 billion towards share buybacks. This shows they have a strong belief in their own stock's value, which is often a good sign. It also means they've likely assessed their growth opportunities and decided that buying back their own shares is a better use of this capital right now than other investments. It is a classic play for mature companies looking to optimize shareholder returns. The main risk is always whether they are buying back shares at inflated prices, or if this buyback program comes at the expense of crucial investments in innovation or growth that could be even more beneficial long term. For investors, this is generally a positive signal if you believe in the company's underlying business. It suggests management is focused on maximizing value per S-share. Alright, that is our breakdown of News Corporation's latest filing on their share repurchase programs. What is your take on these buybacks and what they signal for the company's future? If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.